Welcome back. In the last class, we have learned in detail the preparation of statement of affairs in a columnar form and a statement of profit and loss where a gross loss has been ascertained. You may come across a question where gross profit as well as gross loss, anything can come. Don't expect gross profit in almost all cases. Gross loss might come. I hope you all know how to deal with gross profit and gross loss if it has to be adjusted with the expenses and incomes. So let us go to the next area with regard to the same topic. Next one, ascertainment of profit of a partnership firm. We all know what is a partnership. When 2 or 3 persons join together and conduct a business, it is known as partnership. There are certain rules, regulations and procedures that has to be followed in case of a partnership firm. We are not going further into that, but I hope you all know what is meant by partnership, how the system works. So whenever you come across a question where a partnership firm has to be dealt, how you are going to find the profit? The thing is, finding out the profit is almost similar to the method which we have learned now, but how we are going to deal with the distribution of profit, because in a partnership firm, whether it is a profit or loss, it has to be shared among the partners. So let us deal with how we are going to find out the profit or loss in case of a partnership firm and how you are going to adjust that. So let's go through the case. XYZ were in partnership towards the end of 2018. Most of their books and records were destroyed in a fire. Very good. Balance sheet as on 31/12/2017 is as follows. So this is a balance sheet. If you have learned partnership concerns, the balance sheet will be familiar to you. It is almost similar to a usual balance sheet of a business concern. Asset side, cash. Here a current account is there from Z, one of the partner, debtor, stock, machinery, furniture, advance payments. In the liability side, creditors, capital, partners capital, and current account here also there. So this is the balance sheet of a partnership firm. Apart from that, there are additional information. The partners drawing during 2018 has been proved that X has drawn minus 1,400 minus 1,400 means he has drawn from the business, so there is a deduction. Y minus 1,000 and Z 650. On 31st December 2018, cash was 3,200. These are the balances. Debtors was 4,025. Stock was 5,900. Advance payments was rupees 25 and creditors is 6,040. Machinery is to be depreciated at 10% per annum. Furniture and fixtures at 7.5%, and 5% of interest is to be allowed on capital. And finally, the partners share the profit in the proportion 1/2, 1/3, and 1/6. So there are some adjustments and some tricky adjustments are there. You have to be just cautious while dealing such questions. So in the question, you need to find the profit and you have to divide it among the partners. And here it doesn't mentioning about whether the concern is following a single entry system. The thing is, their books were destroyed in a fire. That is, some of the records were destroyed and some will be there. That is, it is almost similar to a single entry system. Some records are there, some records are not there. So it is almost a typical type of a single entry situation. Anyway, it doesn't matter. It doesn't affect our computation. So for finding out the profit, you need to prepare statement of profit or loss. In order to prepare statement of profit or loss, you need to prepare statement of affairs. And in the question, 31 31/12/2017, we can consider it as a opening balance, and the closing balance will be 31/12/2018. So we have opening and closing dates, and the opening balances are given. Since opening balances are given, we need not have to worry about the opening capital balance. We have already written here or given in the question. So we have to prepare statement of affairs for the closing period. So let us prepare a statement of affairs of these partners for the date 31st December 2018. So prepare a statement showing net trading profit for the year, division of the same among the top balance together with the balance sheet as on 30. Oh, in this question you have to find profit. We know how to find profit. You need to divide the profit among partners. Here a proportion is there. You have to take that. And finally, you have to prepare a final balance sheet. Just like a final statement of affairs which we have prepared previously, like that you have to prepare a balance sheet. In some questions you may come across like that: prepare a final statement of affairs, prepare a balance sheet, like that. In the previous question there was no mentioning about final statement of affairs, but still we have discussed that. But similarly you have to prepare a balance sheet. Final statement of affairs and balance sheet is almost similar, same procedure is followed. So before, let us deal with computation of statement of affairs. First of all, statement of affairs of partners XYZ as on 31st December 2018. Here question is there. For the easy reference only, question is given here. So don't take the values from this one, because these are the opening balances. You have to look for the closing balance. That is one of the important thing you have to consider. Don't mug up these values in this one, because these are opening balance. We are preparing for the closing period. So go through the adjustments, you will get the closing balances. Partners during 2018 were provided 1,400, 650 and 2,650. These are the details with regard to the drawings during the year. So we need not have to consider those amounts in the so go through the adjustment details, partners, drawings during the year, these amounts. We will consider these amounts in the further computation. On 31st December 2018, cash was 3,200. So write down cash. Debtors was 4,025. Write down. Stock during the year, that is closing stock, 5,900. Advance payments during the year is 25. Creditors rupees 6,040. And next one, machinery is to be depreciated. It doesn't have any computation during statement of affairs. We have to consider this depreciation like that in the final statement, because statement of affairs is just an estimate on the basis of value. So you need not have to make adjustment with regard to drawings or any depreciations in the statement of affairs, even it is a opening or closing. So even if you go through it, we can see that there are no other further items. In this case, you can consider the capital balances stated in the opening balance sheet, because it is an assumption that the capital shown in the opening capital balance or balance sheet, the same will be remained by the end of the period also. It is an assumption. So while preparing statement of affairs, that is closing statement of affairs, you can consider these amounts, because in this case the capital amount, this one is also, this capital amount is there, also their current account balance is also there. So you need to make sure Even after adjusting these amounts and these current account amounts, is there any differences are there? Actually, these current accounts do not have to be taken. You need to adjust only capital account. I hope you know what is the meaning of capital balances and current account balances. These are the actual amounts for the that has been introduced in the business for the computation or the computation of the business, and current accounts is the additional account that has been prepared during the period. So for preparation of statement of affairs, you need to consider only this capital account and make sure whether there is difference coming or not. So let us take these capital balances only. Don't consider current accounts, only the capital balances. Make sure whether it is getting tally or not. So machinery is also there. See, in the details it is mentioned that machinery is to be depreciated at 10% and furniture and fixtures at 7%, but no information regarding amount. So it is assumed that the same will be the value at the end of the period also. So machinery 1440, furniture and fixtures 600. This is another important aspect that has to be considered. Okay, we were discussing about capital. Write down the capitals, only the capital amounts. Now just follow the method which we have followed. Take the totals of both sides, find out if there is any, if these sides are getting tallied or there comes any balances, or and if you can see that there is a total of 15,190 in asset side, this one is bigger one, and write down in both sides and take the difference. You can get an amount of rupees 150. This 150 is actually the combined current account of X, Y and Z. Why we have prepared like this? Because in this question capital account and current accounts were given. That is why we have taken the capital balances that we have specifically mentioned in the question as opening capital balance in the closing statement of affairs, because in this question there was current accounts details. Whenever current account details is given, you have to consider the capital of the opening balance sheet in the statement of affairs. Remember, if there is no information regarding closing capital, in that case only you have to follow like this. Otherwise it would have been mentioned in the adjustment. Since there is no information about the capital balance in the adjustment, we have taken the opening balances in the closing statement of affairs also. But remember, we have been taken current account. We were preparing the statement of affairs to identify the current account of the partners by the end of the period. I hope you understand the concept of capital amounts in the closing statement of affairs. And remember, during the adjustment case, these two items were has to be considered, because in the question depreciation on machinery and furniture was specified. So that means there was no other changes in the value of machinery. So take the machinery and furniture and fixtures also in the closing balance sheet. And remember, if there is no information regarding the depreciation of assets or the value in the adjustment, it is assumed that if there are no information regarding the assets in the adjustment, we will consider by taking the same amounts in the closing also. That means that asset was there during the business. During that financial period, that asset was there. I hope you understand the concept. So now statement of affairs has been prepared. Once the statement of affairs has been prepared, because already opening capital details is given, now we have the details of the closing capital also. Now let us prepare statement of profit or loss during the period. We will begin with closing capitals. So the combined capitals of X, Y, Z as per the closing statement is 150. That is, see, we have found that the difference from the assets and liabilities as per the statement of affairs is 150. From that you have to add drawings during the year, that is given in the question 1400, 1000 and 650. You may think that these two amounts were given minus, why this one is shown in plus sign or positive value. We will discuss that because X and Y's current accounts came in the liability side and Z's current account is in the asset side. That is why it is shown like that. We will discuss that part while the preparation of final balance sheet. So the statement of affairs, we begin with combined capital account of 150. You may think that there are many other capital account. Why we have taken this? Because this was the balancing figure obtained from the computation of statement of affairs. That is why 150 is taken. So 150, by adding all these drawings you will get 3200. From that you need to deduct the combined capital accounts of XYZ on the opening date. Opening date, see opening balance XYZ is given 145, 100 and 170 in the asset side, so you need to deduct that. So by adjusting 145, 100 and 170 you will get 75. So by adjusting the values you will get profit during the period, otherwise known as gross profit, that is 3125. Instead of using the term gross profit, you can say that profit before allowing interest on capital. So instead of writing profit before allowing interest on capital, just write gross profit during the year. So we have got gross profit here. So how we are going to deal the adjustments? You have to deduct the expenses and you have to add incomes. So first of all, if you go through the question, you can see that these were the drawings, these were the items of assets and liabilities. Here there is depreciation on machinery and fixtures. So before that you have to adjust interest. See, in the question it is said that 5% interest is to be allowed on capitals. Interest is always provided on opening capital balance. See, 4500 into 5% 225, 3000 into 5% 150 and 1500 into 5% 75, you will get 450. And you have to deduct all these expenses from gross profit. You will get 2675. From 2675 you need to adjust depreciation on machinery. It is mentioned that depreciate machinery at 10%. And value of machinery is 1450. Actually you have to look for the value of machinery in the closing statement of affairs. Since both the amount are same, you can go with this one. 1440 into 10%, you will get 144. And you have to depreciate furniture and fixture, that is 7.5%. Here it is 600 into 7.5, 45. So you will get 189. By adjusting the same also with 2675, you will get positive 2486. That is net profit during the year. So this is how you have to prepare a statement of profit and loss account whenever you come across a question where partnership account has to be dealt. This is a balance sheet of a partnership account, so there will be capital balances and current account balances. And whenever there is capital and current account balances, actually the capital balance has to be considered in the form of current. These current accounts has to be considered as opening capitals and closing capitals. See, we have taken the balance as combined closing capitals of XYZ, and here also we have taken the combined capitals of XYZ of the current accounts. So whenever you are dealing a partnership accounts, the opening and closing capital balances should be from the current account balances. I hope you have understood until now. Next, let us prepare a balance sheet on the basis of the information. The question here. So before we prepare a balance sheet, it was mentioned that you need to distribute the profit in the proportion of 1 by 2, 1 by 3 and 1 by 6. It's very simple. The profit earned during the year is 2486. It has to be distributed to the XYZ in the proportion 1 by 2, 1 by 3 and 1 by 6. So just multiply 2486 into 1 by 2, you will get 1243. 2486 into 1 by 3, you will get 829. 2486 into 1 by 6, 414. So we have completed that part of the question also. Now you have to prepare the balance sheet. It is almost same as the balance sheet which you have learned in your plus 1 plus 2 classes. Let us begin. First one, cash. There are no further information with regard to that. Closing cash balance is 3200. Remember, closing value has to be considered. That is the thing you have to remember. Whatever the statement you are preparing, make sure if it is an opening statement of affairs, opening balances. Closing statement of affairs, closing balances. Final statement of affair or balance sheet, you need to adjust depreciations in outstanding expenses, prepaid expenses, interest drawings likewise. Okay. Cash is 3200. Next is debtors 4025. Since there are no provision for debtors has to be bad debts has to be adjusted, the amount can be taken directly. Next one, stock 5900. Advance payments 25. And let us deal with the asset side. Machinery value was 1440, but during the period we have provided depreciation 144. So the net value is 1296. Next one, furniture and fixtures, it was 600. During the period we have provided depreciation of 7.5%, that is 45. So deduct 45 from 600, you will get 555. After that, Z's current account. See, here there was a item in the opening balance sheet Z 170. So write down 170. From this current account only you have to adjust drawings, interest, profits. So drawings during the year of the Z is how much? 170. So it was in minus 170, that is drawings during the year is 650. So 650 has to be adjusted. After that you need to deduct the interest on capital. Here interest on capital we have given 75 and the profit during the period 414. Providing that, you will get 331. You may think that why we have added drawings and we have deducted interest and profit. In the last case, in the final statement of affair, we have prepared that in the opening capital balance, add interest, add profit, less drawings, less opening. Likewise we were preparing. But why we are preparing like this? Because here 170 is the balance that is shown in the asset side. That is not the actual capital balance. It is in the asset side. So you have to do the opposite. So earlier you have to deduct the drawings from the capital. Since the 170 is in the asset side, you have to add. Interest on capital and profit has to be added to a capital balance. Since 170 is in the asset side, you have to deduct. So you will get 331. So asset side is over. Next one, liabilities. Creditors, there are no further adjustments with regard to that. Creditors 6040. Next one, capitals. The amount will not be affected. It will remain the same because here current accounts is there. So this capital amount will be same in almost all the cases. So write down all the capital balances. After that, current accounts. This is the area you have to be very cautious. First one, X balance, opening balance is 145. From that capital balance, opening capital balance, you have to add interest, because interest on capital is a amount that is earned by the partner or whoever it is. So it has to be added. Add profit of the X, that is 1243, less drawings during the year, drawings 1400. So you will get 2013. See the difference between X current account and Z's current account. Here the balance was in the liability asset side. That is why we have taken the opposite method. Here the amount actually in the liability side where it belongs. That is why we have followed the actual practice. The same will be followed in the case of Y also. Y's opening capital balance is 100. You will add interest on capital of Y 150, add profit of Y 829. From that you have to deduct the drawings during the year. During the drawings of Y is 1000, so you will get the Y's current account balance is 79. Now if you take the totals of these two sides, you will get a tally amount, because it is a balance sheet. Balance sheet will always get tally. If your amounts posting and the computation is correct, you will get an equal amount in the liability side and the asset side. I hope you understand the concept. It's a quite tricky question where certain adjustments are there. Apart from that, current accounts is given, two items in the liability and one in the asset side, so you have to do the computations accordingly depending upon the amounts given in the question. I hope you understand the concept, so just go through all these areas. So in this case we have prepared a statement of affair, after that statement of profit and loss and balance sheet. And remember, in this question there was capital and current accounts, and during the statement of profit and loss account we have taken only current accounts, because in a partnership concern where there is current accounts, further adjustments with regard to capital account will be done in the current accounts, because capital account has been already closed. So any adjustments regarding the capital after the closing of a partnership or capital account in a partnership firm will be conducted in the current account. That is why we have taken current account balances. So just go through it, familiarize each step which we have done. If you have any queries, please let me know. We will discuss about the further cases with regard to the similar pattern in the next sessions, and we have to learn other methods of finding out the profit or loss of a concern following a single entry. And apart from that, we have to prepare final accounts on the basis of the single entry system methods. So familiarize all these terms, and if possible in your +1 +2 you have learned about partnership accounts, go through the partnership account. You need not have to deal with the detailed adjustments of partnership account, but go through the basic concepts. Partnership accounts, where how a current accounts come, when current accounts come, what are the concepts that has to be kept in mind. All these concepts, just go through the previous text. If you have any queries, please let me know. We will discuss about the further cases in the coming sessions. Thank you.